I just closed the trade with a 30% win overnight, and I just put on a new one. So let me show you exactly what we're doing. Now, this is my style of trading using Outlier called the golden ticket trading strategy. And it starts with, what is the market telling us? First, let's go look at the market, okay? The trend, the signal, and the breadth of the market. Looking over here, let's go to the dashboard real quick. The market has a buy signal today. So that makes things easier. When the market is strong, all your stocks are going to be strong. And wouldn't you know it, the market is up 1 percentage point today. Look at this, breaking to new all-time highs today. This is where you want to be. This is when stocks are crashing up, not when stocks are crashing down. All right. So the S&P has a buy signal. It has a green overlay, meaning the 10 is over the 20, price is over the 50. So that's a great start here. So we have a green trend, green signal. Now let's go look at breadth. Breadth, a bit mixed. So in fact, let me go to this here and let's look at breadth on the outset, and then we'll look in all the individual details here. So on the breadth, we do see, and I did zoom in all the way, by the way, we do see a crossover still on the number of bullish signals, number of buy signals over the 10 EMA. So breadth is still crossed over. However, we're not seeing more new uptrends and we're not seeing less new downtrends. In fact, we kind of see the opposite right here. So running a handy little bookmarklet, this tells us that our score on the breadth yesterday was 2, meaning we were getting more uptrends, less downtrends, which is great. But a score on the uptrends and downtrends part of market breadth today was actually 0. So breadth will be orange today. Breadth will be yellow today. So at this point, you're probably thinking, well, then you won't make any trades today. But what's great is we can do a second chance signal. We got a second chance signal today that I just bought. So let's continue on further, because the second chance signal came from yesterday. And it was in either the healthcare sector, the materials sector, or the utility sector, just to tease that along a little bit more. All right, so let's go look at these sectors. One of these 3 sectors got my signal here. Was it the breadth or the fear and greed in those sectors? Let's take a look. So let's pop open healthcare, and we can see on healthcare, it's growing on the fear and greed value. It's not much. It's really not much. 50.52 versus 50.56, but it is growing. We can see the crossover on the buy and sell signal. So it still has bullish breadth. And we don't have any new uptrends or downtrends today. So no score on the donkey channels, but we do have one yesterday, okay? So I'm in the healthcare sector, and we just talked about it right now. The fear and greed was going up, and the breadth was also going up. Before we put on new trades, we must reduce risk, right? Always look to reduce risk before adding new trades. So let's go through our trades that we have on and see where we can reduce risk, right? Now, remember, there are no expectations on the outcome of these trades. There are no profit targets. Right? We don't have a profit target. We have no expectation. We just have a plan to get out when one of my exit signals or your exit signals is hit. So let's start here. Bull market exits. A SPY closing under the 20. So this is market exits. A SPY closing under the 20, close all the trades. If the sector and market breadth cross over negative, close all trades in that sector. We don't have to worry about the sector, and we don't have to worry about the close under the 20 EMA. Both of those are still bullish. We're good to go. Next, let's look at these, right? A half ATR from entry is our stop loss. Then we combine that with a 10 EMA, that is our trailing stop, or a close below yesterday's low. So let's run a few of these that we have on the board right now, which is VKTX. Huge move up on VKTX. Huge move up in VKTX. Up over 4% today. Now, the half ATR was down here at 37.06. Let me move this line over so we can see the bottom of that candle. Bottom of the candle is up here, so let's move it to that point. And we're going to say prior low. Right, so for VKTX, we're using the prior low. Now, we want to find the point of least risk, right? Could I put it way down here on the 10 EMA? Absolutely, I could. But that is significantly more risk than putting it on the bottom of the previous candle. And tomorrow, we'll put it up on the bottom of this candle. Everybody following? So let's put this back here. So VKTX, we just moved this up here. There's no order blocks in the way. Definitely not gapping and crapping. No earnings or expiration risk that we have to worry about. And then we need to look at the fear and greed heat map on here. We said we'd sell at 63. I'll be very honest with you. I didn't look at it yet. VKTX. VKTX. Wait a minute. No, we're not going to roll it. I saw you, Wild Stimpy Norwood. Not going to roll it just yet. It's close. But, hey, we got another 50 cents or so to go. Maybe by the end of the day. That'd be sick, right? VKTX. So yesterday it was at 34. Today it's at 35. So we got a long way to go to get to our 63 heat map exit. So VKTX, all we're doing is moving up the stop on this. That's it. Easy breezy. Let's go to Gilead Sciences. Gilead Sciences. I'm going to move this over so we can see the bottom of the candle. The bottom of the candle, coincidentally, is like a penny off the half ATR. So we're going to leave that where it is, right? We're not going to use this 10 EMA. We're going to keep our risk as tight as possible. Now, am I down slightly on the trade? Yeah, no big deal, right? That's part of the plan. Okay, let's go look at the heat map exit on Gilead Sciences. I have two reasons to close during the day as an emergency exit. Rio hit this today. If the stock has an order block in the direction of the trend and it moves into that order block, now remember, I wasn't even looking at this one yesterday. It was about 2% away or whatever, and we just like smashed into it. It was awesome. Okay. If it runs into the order block, close at the end of the day, unless it's on top of it. We did not get up to that point yet. Day trade using the 5-minute chart. On the 5-minute chart, I'm looking for the 10 EMA to cross over the 20 EMA. If that happens, that is the exit signal. Now, I've been watching this for a couple hours now. I was in my meeting with Mark and Mahesh talking to them, and lo and behold, what do you think happened? We got that close under the 10 EMA at 1:55 p.m. right before we got on the stream. Now, if you're still holding it, you're making more money than me, and that is okay because I followed my plan. I got out, and I made 30.31% on this trade literally overnight. Literally overnight. So now let's see what the sectors are telling us, right? We already looked at the healthcare sector. So this is the one that I'm looking forward to, okay? And let's go run the screener, and I'll show you where I got to this point. So let's run the screener. We're here. We'll go with this one. Run the screener. And so my screener is focused in on just those three sectors: healthcare, materials, and utilities. Now, you can always change this, okay? The outlier signal return being positive, 30-day average volume greater than 1 million, current signal status with the buy signal, market caps are wide open. I am a snob, and I trade only $20 stocks or higher because of that in my snobbery. Fear and greed heat map values are between 0 and 90. The heat map moving up, meaning the fear and greed heat map moving up. And the overlay indicator, meaning if it's got the background with the 10/20 price over 50, we want to see that green, okay? So most of these were from yesterday, but one dude stuck out to me, and it was GMED. Now, I don't know why I didn't see it yesterday. I think it was because the overlay started today. So if we look at GMED, right? With the overlay changed colors. And so this gave us a new opportunity. This is our second chance signal that we're trying to pick up right here. With a buy signal that came yesterday, the overlay color changed today. And let's go look at GMED right now, up 4% on the day. Oh man, this is a bigly, right? Pushing right through this order block right here, right through this order block. You got your 10/20 price over 50 that just happened, okay? So this is what I'm looking for. Now, you're probably asking yourself at this point, what is Outlier and how does it work? Well, old Uncle Warren used to say, be fearful when others are greedy and greedy when others are fearful. Outlier shows you if investors are acting irrationally fearful or greedy and by how much, allowing you to get into the stock before the outlier move happens. Now, if you're ready to save time, make money, and start winning with less risk, it's just 3 easy steps. Step 1, grab the annual pass for just 82 cents a day. Or if you're on the monthly plan, upgrade with one click and save 64% off the regular monthly price. Step 2, start using the Outlier 9. Like Justin D says, dude, I called that in the Discord, the order block. Yep. On the Outlier 9, right? Start using that. And then step 3 is sit back and relax because you just found the easiest way, just like Justin, to save time, make money, and start winning with less risk. So looking down at the stock, let's get all the way down to the stock level. Okay. We know the market's set up on a yesterday signal, set up on a yesterday signal. The sector is set up on a yesterday signal. And then the stock, the trend just crossed over today. That's why we picked it up today. The signal is a buy. Fear and greed. Fear and greed. Let's go look at fear and greed on GMED. I'm going to close a couple tabs so I don't keep bouncing around here. Look on GMED, right? Fear and greed is down way down here. It's moving up though, 32.97. Okay, so that's good. It's moving up. Less fear, more greed. And then outlier blocks, this is excellent. When you see a giant move over an outlier block like this, that is bullish AF. Bullish AF. Now, I just put on my trade like right before we started here. I'm telling you, right before. And it's already up about $1 since that point. So this is a trade I do own as of right now. I am in it. I got in it at, thank you, Joe, for posting and reposting. I appreciate that. I got in in fact, let's go to the options chain right here. So let me show you my rules for the options chain. We already know the Outlier 9 setup. We're only looking at one, and then we're starting at 21 days to expiration. Right? We don't have 21 days here. I'm not going 3, so I'm looking at 38. Okay. We want to see over 250 plus open interest. And what we see here is, right, which one of these guys do I want to go for? That one with all the open interest, even before you guys are even looking at it. Okay. Less than 50-cent bid-ask spread. This right now is around 20 cents bid-ask spread. So that's really great. And then 20% or less extrinsic value. Now, that's the uncertainty value of the stock, right? Uncertainty value of the option. Calculator, come here. Hold on. There we go. All right. So the extrinsic value, the uncertainty value is 81 cents. So 81 divided by 780 means it's only about 10% extrinsic value. Now remember, extrinsic value always decays. Always decays. Every time, every stock, every time. So I am in the September 19th, 55 calls on GMED. Now, the price of that has definitely gone up due to the outlier effect. I bought this a little bit ago, literally 1:58 p.m. Central Time, for $6.59, when it was trading at $60.95. And now it's up about $1 since that point. So this is doing great. This is a huge, huge, bigly move up. So this is my new trade that I put on today. I closed Rio and I added GMED. I'm holding VKTX and I'm holding Gilead right here. And it's not quite up to the rolling point, but let's take a look at that rolling point on VKTX. I'm telling you right now, I'm not going to roll it. So don't get excited, but let's at least price it out so you'll know what the plan will be for tomorrow. So VKTX, I'm in the August 29th 30s. So in the 30s right now, valued about $12. In fact, what did I buy it at yesterday? Let's go see. VKTX for about $10. So it's up about 20% or so right now, which is great. Okay. So if we were to roll this, where would I roll it to? Not the 31, right? I still want to see lots of open interest. So maybe down to the 35. So the way that would look is you would click the bid button to close that trade, right? Then you would click the ask button to open a new trade. You're just basically moving from A to B. That's all we're doing here. In the process, you would pick up $3.38 of credit. When you do this, and we might be doing it tomorrow, okay? No guarantees, no expectations. When you do this, right, that will give you $3.38 per contract as partial profits back in your account. That'll give you $3.38 that you can go trade with now. When you do that, that will keep the trade alive. This is such a ninja hack that people have no idea about, but it allows you to take partial profits. It allows you to put on new trades if you need the capital for it, and it keeps the trade alive. So might be looking to roll that one tomorrow from 30 to 35. But for me, that's it for the day, right? It has been a beautiful, bigly day. But let me ask you, how can I help you out? Where can I help you out on your trades? Is there a trade that you're looking at? Is there one you're uncertain about? I'm going to give you just a handful of minutes where you can have basically a one-on-one with me. Have a one-on-one with me. Manny says he's got an Outlier subscription for his 2 sons and daughter. Outstanding work. Yeah, from Brad. Deep Thought says someone should make a spreadsheet that filters only the option strikes that show you the best strikes. Deep Thought, I have been playing with, so Deep Thought made me a special spreadsheet. Been playing with it. Unfortunately, it's not live data. Of course, it would never be live data in a spreadsheet, right? But I'm still working on it, dude, because I like the idea of being able to put in the ticker and then just lights up across the row, the one that Chris would buy. Yes. Yes. Let's see. Oh, okay, Optimus. What are your thoughts on call debit spreads? Let me get my trash can. Hang on. I might have to barf on this one. I might have to barf. Hold tight. No, I won't do that. No, dude. There was a point in time in my life where I was bigly into spreads. The truth be told, there's no advantage. There is absolutely no advantage to a call credit or a call debit spread versus buying the call outright. Um, let's talk about the deltas though. And I'm glad you brought up the deltas. Let's go over to GMED since that's the one I bought. And I'm in the September 19, I'm in the 55s. Okay. So let's say that he wanted to do a debit spread, and Optimus is a great question, dude. I don't fault you at all. I went through this for years and years and years. If we do this, right, let's look at the deltas, right? So this is the $1 change. I'm sorry, the change for every $1 move in the underlying stock. So it's at 82.50. So for every $1 move that GMED goes up, this option will increase by 82.50. A call debit spread buys a call, and then closer to the money, maybe even out of the money, maybe at the money, he would not he, I shouldn't say he, one would sell a call against it. So that's what a call debit spread looks like. Now, in fact, let's do this. Let's Google up call debit spread, because I want you to get an idea visually what this looks like. Okay. So he's bought the call, right? That's what the call looks like, right? A long call looks like this, but a long call goes up into perpetuity. A long call would go like this, right? All the way up and forever. When he sells the call, when a person sells the call, it actually works against that position, right? So it caps it, right? I don't want caps. I don't want caps. Now, the other issue with this, and this is the main reason why I decided I'm no longer doing this anymore, is not only are you capping your gains on their Optimus, but you're capping your delta. Okay. So for this, when you buy it, you have a positive 83 delta. Okay. So positive 83 delta. But then when you sell it, you're subtracting that delta from you. So 63 in this case, which leaves you at 20. Just 20. Right. And that basically cuts your trade off at the ankles. And it's like, not only did you, and I'm not specifically calling you my friend, I'm saying in general, not only did you cap your gains, but you're also capping how much you can make on any dollar move, right? If GMED goes up by $1 right now, you're going to go up 20 cents. My trade's going to go up 80, right? Now I get it from a capital efficiency standpoint, right? It does cost a lot less to do that. $4 versus nearly $8. I get that. But by buying that one, it's a more valuable asset. Truth be told, honest to God, hand to God, right? That is a way more valuable asset, and it's priced that way on purpose. It's priced that way on purpose. So in my opinion, I would never do a call debit spread at this point in my career. Never in my career for sure. But you know what? I really appreciate you. Helmet says, when you enter GMED, wasn't it in an order block? No, it was above at that point. I saw it was above. Let's go to GMED real quick. No, it was above at that point. Now it's even more biglier. And it would have been excluded for sure. Would have been excluded. Optimus, you're welcome, dude. I hope I didn't come across rude or anything like that. I love doing this game, dude. I really, really hope that I can help you out in so much. Tata says, my trader is lacking the intrinsic and extrinsic columns. How do I calculate them myself? All right. You can do it, but it's a pain in the back. Pain in the back. All right. You ready? So first, different brokers allow you to choose different things. If you go like in Tradier up here, and then you go to grid format, I believe, grid orientation. Hang on. Which one of these is it? Grid format. Oh, I got to go over here to my settings. Hold tight. I got to go into my settings. Option grid. Yeah, yeah. All right. When you come over here and click the settings, you can create your own saved version, and then you can add in whatever columns you want. Okay. But in this case, if you can't do that and you need intrinsic and extrinsic, it is math. You can do it. I believe in you. And let's focus in on the 55 strike here. Right. The way that you calculate this is you start with the current price, which is 61.74. You subtract your strike price that you're looking at, 55. That's $6.74, right? That is your intrinsic value. We see it's the same number. Sweet. Same number. We're in the right spot. Now, that's not what the cost of the option is it? No, it's more like 770. So you take 674 minus 770. That difference right there is your extrinsic value. This is the amount that will decay. Right? It blows to have to do it that way. It's so much easier if your platform does it for you, but that's how it's done. That's how it's done. What's going on, Steve? Outlier rocks. Say it again, Steve. Outlier rocks. Say it again one more time, Steve, for the people in the back. Outlier rocks. That's what I'm talking about. Outstanding. So listen, I hope that this was useful to you. I hope that you're making money, and I hope that you're understanding the value of why we wait in cash until everything is working. And then we go in bigly. We go in bigly, right? I am a huge proponent of big size with a tight stop, not a wide stop with the small size, or what most people do wrong is wide stop and big size, and then they're totally blown up, right? So thank you all so much for coming. If you want to save time, make money, and start winning with less risk, click one of these two buttons. We'll talk soon.